Okay, let's dive right into this explainer. Look, I know that for most Canadian families, insurance just feels like this anxiety-inducing monthly bill. It's that deduction leaving your bank account that makes you wince, right? But today, we're going to totally transform that frustration into pure confidence and control. Because that negative mindset, it is exactly why so many of us end up underinsured, poorly insured, or honestly just totally confused about what coverage we actually have. We're changing that today.
Welcome to the Explainer. We're going back to first principles using the incredibly comprehensive guide from protectyournest.ca to completely demystify how you protect your family. Before you ever sit down to compare policies or, punch numbers into some online coverage calculator, there is one foundational concept you absolutely need to grasp, and that's exactly what we're unpacking right now.
We're breaking this massive topic down into 6 logical chapters. The principle of insurance, the 4 financial risks, what is actually mandatory, decoding key terms, the claims process, and the Canadian safety net.
Section 1. The Principle of Insurance. To start, we need to completely shift how we view this whole concept. Insurance isn't just a product sitting on a shelf, it's a principle of risk pooling. You're basically trading a small, certain loss, your premium, for protection against a massive, uncertain loss. To really grasp the sheer scale of that risk pool, just think about this. $56 billion. That's how much was paid out in life and health claims to Canadians in 2024, straight from the Canadian Life and Health Insurance Association data. When you realize insurers are paying out tens of billions a year, you see this isn't just about collecting premiums. It's a highly active, working financial defense line.
And that massive safety net? It currently covers 29 million Canadians across the country. By bringing together millions of people facing similar risks, the math suddenly just works. No single person knows if they'll need to make a claim this year, but actuaries can predict with mind-blowing accuracy exactly how many of those 29 million will.
On top of that, an additional $9.4 billion was paid out for property and casualty claims. This proves the shared safety net actually deploys when catastrophe strikes. Whether it's a house fire, a flooded basement, or a stolen vehicle, this giant pool of shared capital steps right in to rebuild lives.
Imagine 100 neighbors all throwing money into a shared pot. Without that pot, if one bad event happens to you, like a fire or a sudden disability, you bear 100% of that financial risk all by yourself. It could literally erase decades of your hard-earned financial progress. But with that shared pot, you transfer that catastrophic risk for a predictable cost. Your worst-case scenario suddenly has a strict financial ceiling. The insurance company is basically just the manager of this massive shared pot, making absolutely sure it's always full enough to handle the worst days of our lives.
Section 2. The 4 financial risks.
Every single insurance product out there is designed to address one of 4 broad financial risks: dying too soon, becoming disabled, losing your property, or unexpected healthcare costs. Now here's a totally overlooked probability. 1 in 3 Canadians will be disabled for 90 days or more before retirement. 1 in 3. Everyone obsesses over life insurance, but what actually happens if your income stops tomorrow but your mortgage and grocery bills don't? This 33% reality is a massive probability that families constantly ignore until it's way too late. That is exactly why disability coverage exists, to replace your paycheck when illness strikes.
Section 3. What is actually mandatory?
You're probably wondering what you actually need to have by law versus what's just highly recommended. Well, auto insurance is strictly legally required. If you're caught driving without it in Ontario, for instance, you're looking at a fine of up to $25,000 for a first offense. Then there's CMHC insurance. If your down payment on a house is under 20%, this is mandatory, though it actually protects the lender, not you. Home insurance is usually required by lenders to secure a mortgage. And then we have life, disability, and health. These are technically labeled optional, but let's be real. Given that provincial healthcare doesn't cover things like dental, most prescriptions, or mental health therapy, optional really just means absolutely essential if you want to be fully protected.
Section 4. Decoding key insurance terms.
The crucial point here is understanding the technical language in these legal contracts so you're never caught off guard. Let's decode the jargon, starting with premium. Your premium is just the regular payment you make to keep your policy active. It's the cost you pay for that risk transfer calculated by actuaries based on your statistical risk profile. Whether you pay it monthly or annually, this is your ticket into the risk pool.
Next is the deductible. This is the amount you pay completely out of pocket before your insurer covers the rest of a claim. So if you have a $500 deductible on a $3,000 claim, you pay that first $500 and the insurer handles the remaining $2,500. Think of it as your initial skin in the game before the big safety net drops down.
Then we have the claim.
A claim is simply your formal request to the insurance company to pay for a covered loss. When the uncertain disaster finally happens, filing a claim is how you officially tap the manager on the shoulder and say, hey, it's time to access those pool funds.
Finally, exclusions. An exclusion is a specific situation, event, or condition that your policy straight up does not cover. I literally cannot stress this enough. Always, always check the exclusion section. You need to know exactly where the boundary of your protection stops, like whether pre-existing conditions or intentional acts are left out.
Now, the thing you really need to remember is the inverse relationship between your premium and your deductible. Choosing a higher deductible typically lowers your premium because you're agreeing to absorb more of that initial risk yourself. You always have to pay your premium to keep the policy active, but you only pay your deductible when things actually go wrong. Balancing these two numbers is hands down the easiest way to customize a policy so it actually fits your monthly budget.
Section 5. How the claims process works.
Let's dive into what happens when you actually need to use the safety net you've been paying for. The claims process is a pretty logical 5-step journey. Step 1, contact your insurer promptly. Do not delay this. Step 2, document literally everything. Keep all receipts, take photos, hold on to medical records. Step 3, an adjuster investigates to ensure everything aligns with your specific policy. Step 4 is the approval or dispute phase. And finally, Step 5, the payment is made, whether that's a tax-free death benefit or a repair check, getting you back on your feet.
Section 6, the Canadian safety net.
Now, knowing all this, you might be thinking, okay, but what if the insurance company holding my policy goes bankrupt? Well, Canada has built-in answers for that. The whole system is strictly regulated at the federal level by OSFI and also at the provincial level. But even in a worst-case scenario where your insurer fails, mandatory safety nets step right in. Assurus handles life and health policies, protecting up to $200,000 or 85% of your promised benefit. PACIC steps in for property and casualty insurers up to $250,000. This is huge because it means you don't have to pick your insurer based solely on how massive they are. The Canadian regulatory framework protects you either way.
The ultimate takeaway here, you are not buying a savings account. You are not buying a get-rich-quick scheme. You are buying a transfer of risk. You're buying certainty so you can invest and honestly just live your life without that constant hum of background anxiety. Insurance is designed to return you to the exact financial position you were in before the loss. Nothing more, nothing less. It is the price of absolute certainty in a wildly unpredictable world.
I want to leave you with 2 massive questions to chew on tonight. First, what if life is short and your family suddenly loses your income tomorrow? Second, what if life is long, but aging stops your ability to earn a living? Look at your own situation. Ask yourself these hard questions and decide exactly how you are going to build an absolute fortress around your family's future.